One of the big earnings reports out this morning, and a big mover here this morning, that's Lockheed Martin shares now off just about 0.2%. The company reporting third quarter results beating the street's expectations. Now, this comes amid the heightened geopolitical tensions. The world's biggest military contractor has seen shares rise from the ongoing war, or amid the ongoing war in Ukraine, also expecting demand to continue despite Pentagon spending stuck at prior year levels. For more on this, we want to bring in Ken Herbert. He is RBC Capital Markets Aerospace Defense Analyst, here to break all of this down. Ken, it's good to see you. So we're seeing the stock under a bit of pressure here following these results. Not too much, though, off just about 0.2%. Now, this is a company, obviously, that has been in focus amid the heightened geopolitical tensions that we're seeing worldwide. How does that then position Lockheed Martin? And I guess what is among your focal points here as to the biggest drivers of this stock then going forward from these escalating tensions?
Yeah, hey, thanks. Good morning. So it's wonderful to be with you here today. I think the stock right now, it's reflecting a couple of things. One, the third quarter results were I would say they were okay, right? We had a little better top line growth, 2%, that I think was expected. The margins, though, were a little disappointing across most of the segments. But the company did, however, generate decent cash, and they did increase their 2023 estimate for buyback activity and have now increased earlier in the quarter or earlier in October the buyback authorization. So the fundamental backdrop, in our view, remains positive. Obviously, you've got ongoing sort of restocking activity here in the United States that's really in the very early innings. You've got obviously ongoing activity, unfortunately, in Ukraine. You've got certainly the war in the Middle East now, other areas of tension. So you're not seeing much of that in the numbers yet. But that backdrop is what's, I think, supporting the stock and giving investors confidence that as we think out 24, 25, things should incrementally be better here for Lockheed.
Okay, so that's what I was going to start to ask. What and for when have you modeled that to start to show up in the numbers, Ken?
Yeah, so we saw it a little bit in, the first half of this year was very good for the top line, and 2022 was disappointing. We're seeing, we expect to see some margin improvement here into the fourth quarter. We would really expect to see some of this in terms of top line, some of these other activities into 2024. So these take a while. So we were just at the large Army show last week, and a number of Lockheed programs, specifically within their mission and fire control segment, and think of these as legacy and newer missile systems like HIMARS, obviously, in those systems you're seeing a lot of use of in Ukraine. The DoD is planning to buy a lot more of these systems, both to support activity levels now, but then to have higher inventory levels. But it's taking a while for this to flow through, and it's clearly taking a while for the investments to support the higher capacity to start to drive those results. So it's more of a 24 story when you think about the fundamental backdrop of Ukraine, of the Middle East, of some of these other flashpoints.
And Ken, you have a sector perform rating on the stock, a price target $475. What do you need to see in order to make you feel a little bit more confident in the name going forward?
Yeah, there's really two things in particular. I did mention margins. We had some margins down about 80 basis points this quarter. Ideally, we start to get confidence in sort of a trough in margins and see some better execution moving forward. But then Lockheed, approximately a quarter of its sales come from the F-35, and the F-35 is facing some issues with certification on recent upgrades to the avionics on that program. So we need to see that get approved and some better visibility on when the company can start to deliver the newest variant of the F-35, because that's a very significant piece of revenues. It's not impacting revenues now. It's having more of a cash flow impact. But obviously, it's a very large program. We need to get better confidence in that program turning a corner.
Ken, who is your top pick in the aerospace and defense sector right now?
So for defense exposure, we're really recommending L3Harris, ticker LHX, and Northrop Grumman, ticker NOC. So we think both those companies have better top line prospects for not only the second half of this year, but more importantly into 2024. And then we also feel like in terms of L3Harris, you've got better upside in terms of margin opportunity. We tend to be a little bit more cautious on some of the commercial aerospace names, and that's from a lot of well-documented supply chain issues, other factors that have really limited that sector's ability to, deliver new airplanes. So on the defense side, it's been L3Harris and Northrop Grumman in terms of the primes.
This is largely viewed as bellwether here for this industry. When it comes to what we're also expecting to hear from some of the other names that you just mentioned, some of the other larger rivals this quarter, what can we expect? What should be the takeaways here from this report?
Well, to be honest, the read-through was a little less inspiring than we had hoped. I think the read-through would be, continued margin pressure, a little better top line. I mean, the book-to-bill for Lockheed was only 0.9 this quarter, so obviously the backlog is up at incredibly high levels. So bookings activity a little soft, maybe a little bit better on the revenues, but still caution on the margin. Which, as we think about L3Harris, when we think about Northrop and other names, that's probably one of the most important factors for sentiment. On the flip side, good cash generation, and it looks like Lockheed is certainly going to perhaps return more capital to shareholders than expected. And keep in mind, defense stocks are defensive, right? They tend to outperform in a rising rate environment. They throw off phenomenally good levels of cash. So if there is more macroeconomic uncertainty, that's when these stocks tend to outperform. So that's also providing a very nice backdrop here for the sector and for Lockheed. And we think establishing, the greater buyback activity and capital return to shareholders is incrementally positive as well, and something we look for the other companies to, to be commenting on as well.
All right, Ken Herbert, RBC Capital Markets, Aerospace and Defense Analyst. Thanks so much for joining us this morning. Appreciate it, Ken.
Yeah, thank you very much. Have a great day.